Hey everybody, it's Desiree Whalen with the Whalen team, and I'm very excited today to introduce to you my friend and colleague, David Flory. David Flory and I have been working together since I first started in the business, which was 15 years ago. And we were on a committee together, and we just have had a very good relationship. I've referred lots of my clients to him, and he's done a wonderful job. And so I asked him today, because he's so knowledgeable about all things real estate, that I noticed that there's a lot of information going out there, and I don't know if it's necessarily true or there's commercials about the topic of forbearance. So that's what we're going to talk about, whether you're not, if you're late on your mortgage, or if you're thinking about forbearance, or just curious, or know somebody who's maybe needing something like this. So David, can you tell me, what is forbearance?
Forbearance is basically an act where you call your servicer and you ask for a delay in your mortgage payment. It could be because you've got an illness. It could be because you've got an issue with your employment. Again, it could be a medical issue. And in this case, forbearance really became known in March when Congress established the CARES Act. And the CARES Act offered forbearance if you had or were dealing with anything COVID related. So forbearance became a very big item, and it's a way to delay your monthly mortgage payments.
Okay, all right. So how do you know, though, is that you would qualify?
Basically, you need to contact your servicer. It's who you're making your monthly mortgage payments to. So you need to call your servicer and ask them about forbearance and ask them if you're eligible for forbearance.
Okay.
Basically, anybody that claims that COVID has affected them is pretty much eligible for forbearance. They may ask for some supporting documentation, but they may just ask basic questions related towards your health and towards your reasoning for asking for skipped payments.
Now, is this the same as loan modification?
It is not.
Okay.
Basically, the forbearance, if you're granted forbearance, usually it's either a 3-month or 6-month period of time where you're not obligated to make a mortgage payment during that time frame. A mortgage payment deferral or a modification either restructures your mortgage or it restructures and sets it up so the payments are made at the end of the mortgage that you may have skipped. So it is not a repayment deferral or a modification.
Now, can you get a forbearance if you can pay your mortgage?
That's a good question for your servicer.
Okay.
Because the CARES Act basically says if you've got COVID-related issues, you could get forbearance. So you're going to ask your servicer if you're eligible for forbearance.
Okay. Okay. So is this something that maybe, if you are looking for something else, can you do a refinance instead?
Well, if you've actually taken the forbearance, if you've called your servicer and you've gone into forbearance, and you're missing your payments, your May payment or your June payment, you will not be eligible if you're in forbearance to do a refinance. So rates are good and low right now. And if you wanted to refinance and you're in forbearance, you would not be able to do that. You need to come clear with your forbearance and be out of forbearance before you'll be eligible to do a refinance at this time.
Now, when you talk to your servicer, what kind of questions should they be asking?
Well, I have created, and I know you've got a copy of a list of questions. You want to know, first off, you want to understand what forbearance is.
Right.
You want to understand how you qualify and how you get it. You want to understand how long is it going to be for, 3 months or 6 months? How do you get out of it? What do you have to do? Because the big crushing blow with forbearance is typically when your forbearance ends in 3 months, the way you get caught up is you have to make all 3 mortgage payments plus that month's mortgage payment at that time.
Okay. That
brings you caught up. And all of a sudden, if you find yourself without a job due to COVID and your 3 months is up, you now got 3 months. If your mortgage was $1,000 a month, you owe $3,000 plus the next month's mortgage. Now you owe $4,000. you may not have that money. So you want to ask your servicer how that works, how the repayment works. What happens if you don't have that money at the end of 3 months? Will you talk to them about a forbearance plan, a modification plan, a deferral repayment plan? So ask them what your options are if you don't have the funds, if you take through the forbearance.
Yeah, because that doesn't seem very caring of the CARE Act.
Right. Well, if you look at it that way, unfortunately, some of the mortgage rules were written before the COVID came into play.
Right.
Because people did have medical deferrals and some other issues with job loss and how forbearance worked. But if you wanted to refinance your house, you have to be out of your forbearance. Now, the rules are changing and they're evolving over the last couple months, because at one point in time, we were informed that you had to be 3 months out of forbearance before you'd be eligible for a refinance. And in the last couple of weeks, we've seen memos out from Fannie Mae and Freddie Mac saying that, well, no, if you're out of forbearance and you're clean, you're current with your mortgage, then you could be eligible for doing refinance opportunities.
Okay. And this sheet that David referenced, we're going to have this available for you. So a lot of things that we're talking about are on here, including some servicers that we can go to. Like, I'm going to share the screen with you. So this one right here, this is the Freddie Mac, and it has complete details of what you can do, even for renters. So I believe, David, that people who own rental property should go to this as well.
Correct. There's stuff on the landlord side as well as stuff on the tenant side. So I think, again, the tenant should be contacting their landlord if they have issues related to COVID and been able to make that monthly rental payment.
Okay.
So every landlord operates on a different basis. If you've got a mom and pop landlord, they may work out real well for you.
Right.
And again, a mom and pop operation, they need that income probably just as much as you need your job. So it could be just the opposite, that they really need that rent check coming in to pay the bills. So, so rent is I put a third website on there, the Consumer Financial Protection Bureau. Is the CP, if it was set up in 2008 when we had all the mortgage crisis. So they've got a lot of good material on their website related to financial protection for consumers. So that's a good website to go to for more information.
Very good. So David, what are the rates like right now?
Rates are going phenomenally
super low, aren't they?
Yeah, they are. I've been quoting a lot of refinances. I've got purchases going on that we're working with. We're seeing 3.25% to 3%, 3.125% on 30-year fixed for mortgages. We're also looking for good credit. So marginal credit can be 3.5 or 3.75. Our government programs credits are doing real well. 15-year mortgages are under 3% these days. And if you look at buying them down or paying a discount point, you can certainly get a lot better rate at that point. But you've got to evaluate the cost ratio basis on that. So good opportunities for refinancing.
And it's a good opportunity if you're an investor too.
Because investor rates are slightly higher. They're between 0.5% and 0.75% higher than what the regular rates are. But still, if you could finance investment property under 4% these days, you're going to be doing fantastic.
If you wanted to buy that beach house, and this is it would just as your second home, is that the same as an investor rate, or?
Nope. Actually, a second home is going to be the same as a primary home rate.
Oh,
so yes, you could. And you can do typically up to about, for conventional financing, you can do up to about 90% loan to value.
That's great.
You have to deal with private mortgage insurance. So if you're getting that second home, you got to look at the cost. But that's up for conventional mortgages that go up to $510,400. So
that's great.
Good opportunities.
Yeah. Well, is there anything else that you think we should talk about, or?
The market's so good. Like I said, our lenders, all of us are pretty much overwhelmed at this stage with refinancing going on. There are still a lot of purchasers. The Wilmington market is still doing real well. Homes are still selling. We're still seeing multiple offers on homes. I would advise anybody to get pre-qualified.
Yes.
That's a very strong advantage when you're going into a multiple offer position. You never know when that house comes up this weekend that you like and you want to go buy it, and you've not been pre-qualified. You're going to be at the end of the line as opposed to those that are pre-qualified that are at the beginning of the line. So,
Well, yeah, most listing agents won't even accept an
okay,
offer
there you go.
without a pre-approval, not a
Yeah.
pre-qual, but a pre-approval letter.
Correct.
And they may not even meet you to show you the home unless you are, especially
Yeah.
now.
Well, it's always wise to have talked to a lender
Yeah.
in advance so you know what you're getting into, as well as they can advise you as to where your financial position fits into doing a mortgage.
Right. Certainly makes you more competitive, that's for sure.
It does. It does.
All right. Well, thank you, David. I so appreciate you taking your time. And David has all different types of products. As you heard, he has investor products, first-time home buyers. I mean, he's just fantastic.
Well, we do the standard FHA, VA, conventional. We do USDA mortgages. We will do jumbo mortgages. We've got the North Carolina Housing Finance Agency for first-time home buyers. So we've got a lot of programs that we can access and work with our clients with.
Good. Good. And he will definitely take really, really good care of you. And I think his best asset is the communication. You always will know where you are with things. So, which not everybody does.
That's true.
All right, David, thank you so much. And I so appreciate you being here, and have a wonderful week.
Great. Thank you, Desiree. You have a great day yourself. Bye-bye.